Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 22nd, 2025, and we're diving into the latest earnings report from Sherwin-Williams. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Sherwin-Williams, a leader in the paint and coatings industry, has just released its second quarter financial results for 2025. Let's break down the numbers and see how the company is performing.
Revenue and profitability overview. Let's start with the top line. Sherwin-Williams reported net sales of $6.31 billion for the second quarter, a slight increase of 0.7% compared to last year. However, the adjusted earnings per share decreased by 8.6% to $3.38. John, what are your thoughts on these figures?
While the net sales growth is modest, it's important to note that the company is facing a challenging demand environment. The decline in adjusted EPS is primarily due to increased costs related to restructuring and new building projects. Despite these challenges, Sherwin-Williams has managed to maintain a solid revenue base, which is commendable.
Segment performance analysis. John, can you give us a breakdown of how each segment performed this quarter?
Absolutely. The Paint Stores Group saw a 2.3% increase in net sales, driven by price increases. However, the Consumer Brands Group experienced a 4.1% decline due to soft DIY demand in North America. The Performance Coatings Group's sales were flat, with growth in Europe, Asia, and Latin America offset by declines in North America. Segment profits were notably down in both the Consumer Brands and Performance Coatings Groups due to increased costs and unfavorable currency impacts.
Operational efficiencies and future outlook. Despite the challenges, Sherwin-Williams has achieved gross margin expansion for the 12th consecutive quarter. What does this indicate about their operational efficiencies?
This consistent margin expansion highlights Sherwin-Williams' ability to manage costs effectively and optimize their operations. However, the company is also facing significant restructuring costs, which they have accelerated in response to the ongoing demand softness. Looking ahead, they have adjusted their full-year EPS guidance to $11.20 to $11.50, reflecting a cautious outlook given the market challenges.
CEO insights and strategic initiatives. Heidi G. Petz, the CEO, mentioned the company's consistent and disciplined strategy. How is Sherwin-Williams positioning itself strategically in this environment?
CEO Heidi G. Petz emphasized the company's focus on executing their strategy despite the choppy demand environment. They are aggressively accelerating restructuring initiatives to adapt to market conditions while continuing to invest in competitive opportunities. Additionally, Sherwin-Williams returned $716 million to shareholders through dividends and share repurchases, demonstrating their commitment to shareholder value.
Key takeaways. In summary, Sherwin-Williams has shown resilience in a challenging market with a slight increase in net sales and continued gross margin expansion. However, the adjusted EPS fell short of analyst expectations. John, any final thoughts on Sherwin-Williams as an investment prospect?
Sherwin-Williams remains a strong player in the paint and coatings industry, but investors should be mindful of the current demand challenges and restructuring costs. The company's strategic initiatives and shareholder returns are positive signs, but the market environment will be a key factor moving forward.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Sherwin-Williams' performance in the comments below.